Hello, everyone, and welcome to the Financial Profit. It's excellent to see you here. Today, we're going to focus on just one stock, yet investing in this company could potentially make you a lot of money. And I believe that this is one of the most underrated companies in the AI stock universe. So, in today's profit report, we will discuss Marvell Technology. Marvell Technology, ticker symbol MRVL, is a fascinating company. Unfortunately, it's widely regarded as a distant second to Broadcom in the AI space. Both companies develop and create custom application-specific integrated circuits, also known as ASIC chips. These are different than what NVIDIA and advanced micro devices, GPUs, offer, but both approaches power AI at its base, at its core, providing the necessary compute power for the massive data centers to function and continue to expand globally. While GPUs and ASICs have their respective pluses and minuses, Marvell plays a crucial role in the general AI accelerator space. Its chips are often implemented as industry leaders for customized power-efficient solutions and are used by hyperscalers like Amazon, Microsoft, Google, as well as other very significant players in the AI industry. Nonetheless, Marvell's stock basically crashed recently. It took a very significant beating despite reporting very solid AI numbers. Unless the earnings, guidance, and margins are essentially flawless, stocks are likely to get punished in the near term. Nonetheless, I want to stress the near-term element, as Marvell's recent stock sell-off seemed unjustified, and I actually increased my position by about 33% on the dip lower. Peak to trough, Marvell declined by about 23% from $79 right after it reported, all the way down to about $61 a share. This massive sell-off amounted to a market cap loss of about $15 billion for Marvell. This is a very considerable decline for a mid-sized chip maker like Marvell. And given this dynamic, its stock appears exceptionally cheap here. Moreover, the slowdown fears appear very much overblown, which could make Marvell stock a strong buy here again. In fact, this dynamic reminds me of the AMD story when many market participants were overly negative about its stock earlier this year. Now, we all know how that turned out. AMD has gone up a lot and could continue heading much higher. Marvell may be facing a similar challenging short-term dynamic, but could soon recover and potentially move much higher, and let me attempt to explain why. Yes, Marvell stock was down by 23%, despite reporting 69% year-over-year data center sales growth, which pretty much seems ridiculous. Let's just dig into these numbers a little bit here. Marvell reported inline earnings per share of 67 cents. Marvell also reported $2 billion in Q2 revenues, which was a 58% year-over-year revenue increase. However, the sales figure came in just shy of the consensus estimate, about 10 million short, which is not a significant amount, but nonetheless, the market was looking for a little bit higher sales for Q2. The market was clearly very upset as it sent Marvell stock down by almost 25%, and that was primarily because of the guidance. For Q3, the company guided to sales of $2.06 billion versus the consensus estimate for $2.1 billion, so about 50 million short of the consensus estimate. Again, in the greater scheme of things, $50 million really is not that significant. Nonetheless, we were looking for better guidance. It doesn't mean that Marvell won't beat the $2.06 billion, or it could even eclipse the $2.1 billion revenue estimate, but Marvell may be being cautious because of the uncertain landscape, and it could also be sandbagging estimates so it has an easier time beating next quarter when it's time to report, because it's definitely not a great look for the company not to achieve its sales estimates for Q2. So I'm deducing that Marvell is probably lowering the bar here for themselves so they have an easier time beating in Q3, which actually makes a lot of sense in my view. Also, I want to point out that the company guided to 74 cents in earnings per share for next quarter, better than the 73-cent expected estimate. And this is a very constructive development because this dynamic implies that Marvell may be becoming increasingly more efficient and could do extremely well once its growth potentially re-accelerates. So despite being cautious on revenues, it's actually guiding to higher than expected earnings per share, which is suggestive of increased efficiency and higher profitability potential, which is very important. And the CEO also said that, quote, Marvell's growth is being fueled by strong AI demand for our custom silicon and electro-optics products, as well as a significant increase in the pace of recovery in our enterprise networking and carrier infrastructure end markets. Our custom AI design activity is at an all-time high, with the Marvell team now engaged in over 50 new opportunities across more than 10 customers. So it's also positive that the $2.5 billion auto divestiture is complete, as the company can now fully focus on its custom data center AI segment, which offers enormous opportunities for Marvell in the near, intermediate, and longer term. It appears that the market may be treating the current transitory slowdown in growth as a potential permanent slowdown event, which it is not so. Even with the slightly lower guidance, Marvell should still grow sales by about 35% from the same quarter 1 year ago. Additionally, we have the potentially transitory China factors to consider, and Marvell's business could reaccelerate as we advance. Marvell's stock has become dirt cheap. Now, despite the recent hiccup, so to speak, Marvell should see considerable EPS growth increases in future years. In fact, the company didn't say or imply anything negative about its future earnings potential. Instead, Marvell increased its Q3 guidance by 1 cent over the consensus estimate. Therefore, I believe that Marvell can at least meet the consensus EPS estimates and likely surpass them as we advance. The average consensus EPS estimate is for $3.56 for next year. Given Marvell's depressed stock price of about $65 a share here, it's trading at a ridiculously low valuation of just 18 times forward earnings now. So Marvell's sales growth is likely to remain very robust. There is a high probability that Marvell can maintain a relatively high 18 to 25% revenue growth rate in future quarters. The growth potentially remains very considerable here and likely warrants a higher valuation than just 18 times forward earnings estimates. Now, it's about the future earnings, and Marvell could excel, enabling its stock to rise substantially in future years. We could see very substantial and healthy earnings per share growth of about 25 to 30% in future quarters. In fact, if we take Marvell's forward PE ratio about 18 and divide it by its future expected EPS growth rate of about 28%, we arrive at a rock bottom low price to earnings growth valuation PEG ratio of only about 0.64 here. Now that's extremely cheap because by traditional PEG metrics, a growth stock like Marvell could trade around a 1.5 PEG ratio and still be considered relatively inexpensive. Now this dynamic implies that even if Marvell stock doubled by price to earnings growth metrics, it still would be considered relatively cheap. Therefore, I don't care as much about Marvell missing very slightly on sales and forward guidance. All this says is that, analysts may have gotten ahead of themselves, and Marvell may be going through a very transitory minor slowdown period. Yet, at the end of the day, Marvell remains a highly profitable AI company with substantial growth potential ahead. And unlike many other AI stocks, it's actually extremely cheap right now, making it an excellent buy in my view. And Wall Street also remains very bullish on Marvell shares. Due to the recent drop, it would take Marvell nearly 40% to reach its average $90 price target estimate on Wall Street. I also don't believe there will be many material downgrades following this earnings report, as fundamentally not much has changed. The stock is barely above its lowest price target right now, and the downside may be quite limited here. I also want to highlight that high-end targets go all the way up to $130 plus, which implies the potential for 100% plus gains in the next 12 months or so. I also want to mention that many analysts only began increasing price targets very recently, and despite the less than optimal near term dynamic, some analysts may continue increasing the stock's longer term price target estimates as we advance. Therefore, I maintain my strong buy rating and a $105 price target for Marvell going forward. Thank you very much for watching my profit report. I truly hope that you enjoyed it. And more importantly, I hope that the knowledge you gain here helps you make more informed investment decisions in the future. I would also greatly appreciate hearing your comments, so please join the conversation in the comments section below. If you enjoyed my video, please click like, share, and subscribe to my channel so that I can continue creating these highly informative and potentially very profitable videos for you. You can also join the Financial Profit, my exclusive investment community, which is seeking Alpha's #1 service for proven portfolio profits. So don't hesitate to join our incredible investment community now. Thank you very much for watching. See you next time and have an amazing day.